Good afternoon. Well, the Aussie share market rose for the third straight day today, finishing with a gain of about 0.4%, with some lacklustre or weaker than expected results in way of the business survey from NAB, causing us to slip back from our day high of 6,601 points, and that was for the benchmark S&P ASX 200. But we still had a positive day nevertheless, adding to the gain of 0.7% that we saw yesterday. We've now recouped a fair chunk, or about half or over half of last Thursday's fall of 2.2%. But we're still down for the month of October, with investors really taking this as a sign to buy in. Nevertheless, today most of the sectors were in positive territory, and with the oil price gaining over the past couple of days, albeit a slight rise, the energy sector was one of the standouts today, up about 1% earlier. Industrials and consumer discretionaries also did well. And on the company news front, we saw Santos shares do well today. They rose 2.5%, hitting a high of $7.56 earlier, moving off yesterday's close price of $7.35. So if you make up the difference, that's a rise of about 21 cents. And the rise really comes on the back of Santos releasing a stronger than expected result report card at about 9 a.m. before the market opened. So investors really moved with their feet, showing confidence in their recent data, which is why the stock jumped to a month high. The results really confirmed that the Calais Reservoir, at its 80% owned Dorado project in Western Australia, the results were better than expected. Santos says the results are the highest ever gas flow results from the Northwest Shelf appraisal well test. UBS and Goldman Sachs have Santos as a neutral or hold, while Morningstar is a bit more bullish or optimistic, saying the stock, or Santos, should be an accumulation stock, and they have a 12-month price target of $9.25 for Santos, noting that Santos is really set to benefit from the rise in demand for energy, and given that they've got proven and probable reserves, predominantly gas, which are at the doorstep of the key Asian markets, they are set to do well. And that's according to Morningstar. Looking at their shares year to date, Santos shares are up 37%. Playing a different song today, a stock that didn't do so well, Pro Medicus, the healthcare imaging company, lost about 2.5% today, but they have seen a stellar run year to date. Their shares are up a massive 170% this year. However, it's lost about 20% from their announcement that they announced on the 6th of September last month. And that announcement really said that the founders sold down 1 million shares each in the company to really improve the company's liquidity, which is why we saw the company's shares pull back from those all-time highs last month. Today, we showed our resilience from Wall Street, or US, shaking off those negative leads that we had from the outset, where we saw the US major indices lose a bit of strength overnight. Broadly, or on a more broader perspective, the broader S&P 500 was down the most, 0.5%, while the Dow Jones lost about 0.3%. So why the negativity in the US last night? Well, we had a report that came out of the US saying Chinese officials are increasingly hesitant to agree to a broad trade deal pursued by President Donald Trump. And this was not what the market was expecting, creating a bit of jitters ahead of the US-China trade talks that really kick off again this Thursday. And already this year, the two largest economies in the world have slapped billions of dollars of tariffs on each other's goods. That's going back to 2018, and that's put a negative taste in markets' mouths and has added some sour grapes to business and consumer sentiment there. Turning to US futures now, they're suggesting a gain when they reopen this evening. Asia markets are higher on Tuesday, with most Asian indices up. Japan, South Korea and China and Hong Kong are trading higher. We also saw Samsung's shares in South Korea gain over 1%, with the tech giant announcing stronger than expected forecasts for the third quarter of this year.